Assalamualaikum warahmatullahi wabarakatuh, and hi everybody. I'm Umi Junaida Hashim, accounting lecturer from School of Accountancy, University Sultan Zainal Abidin. Alhamdulillah, we have discussed few chapters starting from introduction of accounting, accounting concepts, accounting equation, accounting cycles, and adjustment of accruals and prepayments. For today's lecture, we continue on another part of accounting cycles and the part 4, which is on accounting of non-current assets, which is on tangible assets. In this topic, we want to ensure that students are able to define what is depreciation for non-current asset, identify causes of depreciation, determine cost of non-current asset, identify methods of depreciation, and then they're able to make sure that they're able to prepare journal entry on acquisition, depreciation, and disposal of non-current asset, and also want to show to them how to disclose the non-current asset in financial statements. We will continue on another adjustment that we need to do when we preparing financial statement. It is accounting of non-current asset, particularly on tangible assets. So what are tangible assets? Tangible assets are non-current assets that we can see and touch it. We use the non-current asset in the daily business operation to generate profits. Now, we're going to discuss further on our topic. What is depreciation? Depreciation is an allocation on original cost of non-current assets over its expected useful life. So, what are tangible assets? Tangible assets are non-current assets that we can see and touch it. We use the non-current assets in the daily business operation to generate profit. Non-current asset is tangible non-current assets which is acquired by a firm or company for long-term use for purpose to generate revenue for a number of years. So these are examples of the non-current assets. There are computer, machine, crane, car, office equipment, lorry, and others. Alright, so how about the useful life of non-current asset? It could be 3 years, 4 years, 5 years, 10 years, or could be more than 20 years of the useful life. When a non-current asset fulfills the definition, then it will be as a depreciable asset. Once we calculate depreciation for the non-current asset, the depreciation amount for the current year will be charged as an expense in the statement of profit or loss and other comprehensive income. Next, we're going to look at there are two bases that can be chosen by a company when provide depreciation on its non-current asset. Either they use yearly basis or monthly basis. Yearly basis is the simple one, whereby company going to calculate depreciation for 1 year. No matter of when the asset were acquired, the depreciation will be provided for 1 year. For example, if the asset acquired in July, the depreciation provided is still for 1 year. For the monthly basis, it will provide depreciation according to the number of months the assets belong to the company. For example, if the company bought a machine on 2nd of April 2016, the number of months to be depreciated is starting from April until December, and it will be 9 months. And if the asset acquired for less than 15 days of the month, the depreciation will not be provided for that month. For example, if the company bought the machine on 20th of April, the number of months to be depreciated is starting from May until December, and it will be only 8 months. Now, we're going to look at the causes of depreciation. There are a few reasons why we need to provide depreciation on the non-current asset. The first one is due to wear and tear. The non-current asset that used daily in operation of a business will be last for a few years, and it will be different for the non-current asset that being kept storage for a room without any usage. Next is related to erosion, rust and decay. We need to provide depreciation of non-current assets such as on car, lorry due to the steel being rusted, and this occurred because of physical factor. The last reason is due to obsolescence. Some of the non-current assets become obsolete due to time factor. For example, on technology product easily become obsolete when introducing of the new model. Next, we're going to look on how we're going to determine cost of non-current asset. Its cost is the total cost that ready to be used and will include the following, which is the purchase price, transportation costs, insurance, tax, and installation costs. Next, we're going to look at journal entry. We have to prepare the following entries on non-current assets. The first one, we're going to debit non-current asset, credit bank or cash or creditor. This is to record acquisition of non-current asset either by cash, bank or credit. Number 2, debit depreciation expense, credit accumulated depreciation. This entry to record yearly depreciation of non-current assets. Now we continue on methods of depreciation. There are few methods of depreciation. There are including of straight line method, reducing balance method, double reducing method, sum of the year digit method, replacement method, revaluation method, production unit method, and production hours method. However, only 2 methods that we are going to cover, which are straight line method and reducing balance method only. We look first on straight line method. Straight line method will be the same portion of depreciation each year. The formula of this method as follows. Original cost minus with the expected salvage value, and we divide with the expected economic life of the assets. Now, I'm going to show you an illustration of calculation on depreciation of non-current asset using straight line method. Let us read the question first. A machine acquired by company ABC Sdn Bhd on 1st January 2016. The accounting period of the company ends on 31st December each year. The cost of the machine is 25,000 ringgit paid on credit. Estimated useful life of the asset is 10 years. The salvage value at the end of the 10 years is estimated to be 1,000 ringgit. Depreciation charge apply on yearly basis. So the question required you to calculate depreciation charge for the machine and prepare the necessary journal entries. Show an extract statement of profit or loss and other comprehensive income, and also statement of financial position as at 31st December 2016. Let's analyze the information. We have 25,000, so this is as the cost of the machine. We also have 10 years, and this is as the useful life of the machine. Next, another information is 1,000, which is as the salvage value or scrap value of the machine. Now, we look at the answer. Annual depreciation expenses of the machine is calculated using the following formula. Original cost minus with the expected salvage value and divide with the expected economic life or useful life of the machine. So 25,000 ringgit minus with 1,000 ringgit, and we divide by 10 years and we will get 2,400 depreciation charge per year. Then for the journal entries, we're going to debit machine 25,000 ringgit, credit creditor for 25,000, and another journal entry is we're going to record the depreciation expense. So we debit depreciation expense for 2,400 and we credit accumulated depreciation for 2,400. Okay, we continue. Now, I show you on the abstract statement of profit or loss and other comprehensive income and statement of financial position as at 31st December 2016. For the abstract statement of profit or loss and other comprehensive income for the year ended 31st December 2016, the depreciation expenses charge is 2,400. Then for the statement of financial position as at 31st December 2016, the machine presented as non-current assets for RM 25,000, then minus with the accumulated depreciation of 2,400, and then we can get the net book value of the machine of 22,600. Next, we're going to look at another methods of depreciation, which is on reducing balance method. Reducing balance method, also known as the declining method or diminishing balance method. Effect of this method is provide greater amount of depreciation charged for the earlier years and smaller on the later years of the asset's life. So the formula for this method is cost of non-current assets or the net book value of the non-current asset times with the percentage provided. Now, I'm going to show you how to calculate the depreciation of non-current asset using reducing balance method from illustration 2. Let us read the question first. XYZ Syndrome Berhad bought a car on 1st June 2014 by cash. The accounting period of the company ends on 31st December each year. The cost of the car is 123,000. Insurance charged on the car is 2,000. The company decided to depreciate the car at 20% using reducing balance method. Depreciation charge apply on yearly basis. So, the questions require you to calculate depreciation charge for the asset for the financial year end on 31st December 2014 and 2015. Okay, so the answer as follows. We transfer all related information in the formula of reducing balance method. So 125,000 ringgit times with 20%. So we will get the depreciation for the year 2014 for 25,000 ringgit. Then depreciation charge for the year 2015 will be the net book value on 1st January 2015, which is 100,000. We get it from 125,000 minus with 25,000. So 25,000 is depreciation which that we have charged for the year 2014. Okay, next we calculate the depreciation charge for 2015 using the formula of reducing balance method, which is 100,000 times 20%, and then we get 20,000 the depreciation charge for the year 2015. Now we're going to continue on disposal of non-current assets. So, what is disposal of non-current assets? It is a situation where a company disposes or sells its assets to another party or replacing it with the new, or the asset no longer can be used. So, what the company need to do when the disposal occurred, or what would be the effect on the disposal? All the accounts related to the asset need to close off. So, what are the related accounts? The non-current asset accounts, accumulated depreciation accounts of the respective assets. Another effect, there will be gain or loss on the disposal will occur. Now, I'm going to show you an illustration of the disposal of non-current assets. So, let us read the question first. Assuming that ABC Sdn Bhd owns a machine. Okay, the machine purchased for 30,000 ringgit few years ago. The accumulated depreciation charge at that time was 28,000. The company sold the asset on 31st December 2016 and received cash for 10,000 ringgit. The company policy provided that none of the depreciation charged in the year of disposal. So, the question required you to identify whether it is gain or loss on the disposal, and also record necessary journal entries and ledger. So, let us look at the answer. First, we prepare the journal entries. Okay. The first journal entry is we debit the disposal for 30,000 and we credit the machine for 30,000. Okay. This is to write off the machine at cost. The second journal is we debit cash for 10,000, credit disposal 10,000, and this is to record cash received from disposal of the machine. The third journal entry is we debit accumulated depreciation for 28,000 and we credit the disposal account for 28,000. So this journal entry is to write off accumulated depreciation of the machine. Okay. Next, or the last one of the journal entry, we're going to debit the disposal of 8,000 and we credit gain on disposal of for 8,000. So this is to record gain or loss on the disposal. So the gain on the disposal is 8,000. Okay, so this is the ledger. Okay, so in the ledger we post all the journal entry that we prepared previously. So we open up the related account, okay, which is the disposal account, machine account, and accumulated account. Sorry, accumulated depreciation account. Okay, so we come to the end of the chapter. I hope that you have an understanding of this new chapter on depreciation of non-current asset. So my advice, trying to do exercise on this chapter to have a better understanding on depreciation of non-current asset. So good luck and thank you.